Welcome back to our podcast at Financial Sector Deepening Uganda. I am your host, Brenda Amon-Yiki, and we welcome you to the third and final episode on our USSD series. If you have been watching and following keenly, we started off our series by talking and defining USSD. We talked about its importance in our drive to deepen financial inclusion in Uganda. We did talk about the experience, especially with different financial service providers. We went on further to look at what alternatives are there. So the discussion then was, is USSD still necessary in Uganda? So we did look at what other countries, especially, for example, our neighboring country, Kenya, are doing, adopting different types of technology, using near-field communication, biometrics, AI, and different types of technologies, and what they have done to promote these in their different countries, or the different collaborations that they have had. So today, in our last and final episode of the series, we are going to bring it home to Uganda and say, okay, we know that these options exist out there. What can we do as Uganda to then implement? What kind of infrastructure, what kind of policies, what kind of collaborations and partnerships, or even investments do we need to have in place as a country to then try and implement these alternatives? Because we need to move with the world. We are not saying that USSD is not necessary. I think we kind of made that clear in the previous episodes. But we are saying that as a country, is it time to move on? Is it time to adopt different technologies? And we've defined those. So today, allow me to introduce to you my very experienced panel. We shall welcome back Joseph Lutwama from FSD Uganda, and then also welcome to the podcast Sulaiman Mugalasi, who is the head of technology at Airtel Money. So you can see how the fit comes in. This in itself is a step in the right direction. We have someone from the development side, and we also have a fintech, Airtel Money. So we are going to leverage on their experience and the things that they have seen in their drive to increase financial inclusion, but also push financial services to a deeper population in Uganda. So welcome to the podcast, gentlemen.
It's a pleasure.
Yeah. So just taking it on and bringing it back to Uganda. I know, Joseph, you were part of the podcast in the second episode, but I'll start the question off with Sulaiman. From where you sit, Airtel Money, you've been in the market for a while. You've been trying to grow and make sure that everyone, for some reason, everyone is using Airtel Money and everyone is able to transact on their phone, right? So as we start the conversation and move it forward to other technologies like NFC, biometrics, and AI, from where you sit, what kind of technologies or investment in technologies do you think organizations like yourself and others would need to have in place to, for us to start moving away from just USSD?
Okay, thank you so much. The transformation in technology calls for investment in network infrastructure, calls for investment in the hardware infrastructure, and calls for investment in, of course, software. So as the transformation happens and move away from USSD to digital platforms, mobile applications, the use of the internet becomes the primary necessity or requirement. And in a telecom setting, for example, Airtel, we try as much as possible to cover a wide range of our customers within Uganda to ensure that they have accessibility to connectivity. And that's what the network infrastructure investment looks like, to support the investment of or the development of mobile applications, development of biometric applications, and also, of course, near-field communications like the NFC technology. So investment in network is very critical, and this brings about connectivity and, of course, broadband. Recently, Airtel Money has just rolled out 5G, and this is just to support the transformation from USSD to use of mobile app that are internet-driven. The other investment would be around hardware. that supports, of course, giving an example of biometrics and also NFC technology. They are driven by hardware, so there has to be server investments. You have to have applications run on servers. You have to have applications run on databases. So you invest in hardware, and you also have to take care of the security as you invest, as you go ahead to introduce digital applications. You also have to take care of security. Instantly, when you look at the move from USSD, which was more secure, to digital applications that are internet driven, there's need to do intrusion assessments. There's need to do thorough assessments on the investment of the network, the infrastructure, to ensure that you're safe around security. You safeguard the customer whose fingerprints you've captured on a biometric, and also they come to verify the same fingerprint. There should not be any intrusion to that data. So you have to make sure that you invest in security applications as well.
Yeah, I like that you've brought a balance between the software, hardware, but also you've covered the issue around security. So I'll move over to Joseph. Our mandate is to reach the low-income earner, or what they call the underserved population. And we know the challenges around them accessing digital services. So how can we design some of these technologies that we've spoken about to make sure that we include those people into the design work?
I think there's not so much we can do about the technology. But I think what we can do is, how can we make it accessible?
Yeah.
And how can we prepare our people to meaningfully actually use it? You will find that many of us have smartphones, and there's a reason why they are called smartphones, because they're actually smart gadgets that can make your work very easy. But most of us almost hardly use probably even 1% of the capabilities of those smartphones. So one is, we need to make this technology accessible, but also we need to build the capacity of our people to meaningfully use it. So what does that exactly mean? It can be made accessible on different fronts. One is the infrastructure. Sulaiman has actually talked about it. It requires massive investment, and that cannot only be done by the private sector, because there are places and there are regions where it does not make economic sense to make massive investment upfront. It will probably take years for a private sector player to recover their investment. So in such instances, you will need public investments that is much longer term, that is more focused on the public good than just mere profit, to actually take the first hit. And that would require government to make massive investments of rolling out, for instance, fiber networks, infrastructure that allows for internet to go to far-to-reach areas, so that the likes of Airtel, MTN, and other providers in the market can then just come and ride on that infrastructure, so that they don't have to make that massive investment upfront. So that's one angle. And I think we should give credit to government, because under UCC, I think they have a fund where even the private sector contributes to that fund, whose role is to be able to extend communications and internet to the far-to-reach areas. And I think I read in the newspapers recently that actually government will wants to make internet even much, much, much cheaper. So that's one angle on the infrastructure side that will make sure that the technology that Sulaiman has talked about are able to reach the farthest they can go. The other one is the gadgets or the devices, because in the last episode we got to know that the digital economy is like another country, where you need a passport to go to that country. And likewise, for our people to meaningfully participate in the digital economy, they need to become digital. And one of the requirements of becoming digital, you need tools equivalent to like a passport to actually participate in that space. Yeah. We got to learn last time that having a SIM card and a mobile wallet is one of those prerequisites for you to participate in the digital economy. Without that number, Airtel, I think 075, MTN is 077. I think now even have UTEL and other providers in the market. They give us that address that recognizes us within the digital economy. So what that means that literally almost every Ugandan, adult Ugandan above 18, because that's the minimum age upon which you can get a SIM card, at a bare minimum, they should have a SIM card registered in their names. They should have a mobile phone. Okay, we can start with a feature phone, but our aspiration should be a smartphone, because a smartphone is able to do so much more than a feature phone. All the things that he has talked about, AI, near-field communications, they'll become much, much, much easier with a smartphone. And so we need to get those devices into their hands. Currently, not many, many have feature phones, but very few have smartphones. And there's only much you can do with a feature phone. So we need to get as many Ugandans, and we need to get as many smartphones in the hands of Ugandans. The other thing we need to do is that they all need to have a mobile digital wallet, because you cannot move money in the digital economy without the digital wallet. That's why you keep your digital money. You can't keep cash in the digital wallet, and cash does not work in a digital economy. So if government can work with the private sector players to make sure that smartphones are affordable, they can easily get into the hands of the wallet. I think they have made it much cheaper. They could even probably make it much cheaper. I got to learn the other time that even much as you buy the SIM cards at 1K, 2,000, they're actually even subsidized. Okay. The telcos actually have to pay a bit more, but could probably government, with support from government, we could even make that much cheaper. If possible, we could actually make it for free, so that at a bare minimum, everyone should have a phone, a smartphone, everyone should have a SIM card in their own names, and everyone should have a mobile digital wallet. That then provides an equal basis for everyone now to actively engage in the digital economy.
Yeah, I think you raised some very valid points there, and that takes me to the next point on collaboration. I think listening from Sulaiman's introduction and then to you, Joseph, it comes out strongly that there is need for partnerships and collaboration, and government is in the middle of all this. But I'll take it to you, Sulaiman, from the MNO side and the kind of infrastructure that you've spoken about. What are those partnerships that you think will help accelerate our drive towards alternative technology to USSD? What partnerships do you foresee, right, that we need, whether it's in the private sector or on the development side and government? It would just be good for us to get a deeper understanding from your side on what those partnerships and collaborations will look like.
Okay, thank you so much. So from a public sector point of view, the partnerships, especially for telecoms, would be with the government, UCC, and of course NITA Uganda, in terms of extending the coverage of the fiber, for example, to the far-to-reach areas. And this will then enable the telecoms to ride onto that infrastructure, because it's a big investment, like Joseph mentioned. So that's one of the key partnerships that we need, because once the government puts down or lays down that infrastructure, it will be very easy for the NMOs or the telcos to build now connectivity basis that infrastructure. Then from a financial service provision point of view, the private sector partnerships would be with the banks, telcos coming together or fintechs coming together to partner with the banks to extend digital services. You realize that MNOs have data reach given the coverage of the customers that they have. So if partnerships happened with the banks and others financial service providers, it becomes very easy to craft products or services to the underserved or undeserved customers. For example, coming up with products that support their growth in terms of loans, in terms of savings. So that will be a critical partnership within the private sector. But of course, as we go ahead to build digital solutions and of course moving away from the USSD to the digital platforms or mobile applications, there's partnerships to fight or curb cybersecurity, because as you build so many applications and run them over the internet, you're calling for threats, cyber threats. So banks, the government, the telcos have to come together to fight the cybersecurity threats that come with digital transformation.
Yeah. Yeah, I think you've put that very clearly. But now over to you, Joseph. He's mentioned the partnerships on the private sector side. So from where we sit in the development world, how do we play in that space? How do we contribute to this move towards alternative technology?
I think there are, I could say like two, or even probably more roles that we can play as development partners. The foremost that we can play is technical assistance. Technical assistance in terms of advisory and knowledge. We sit in a very unique position in the sense that we have the liberty to invest in research and development, which both the private sector and the public sector in this part of the world may not be at liberty to do. Yeah. Because they are probably spending a lot more time trying to solve puzzles of serving the customer. So they may not have a lot more time to actually research and figure out where the gaps are and what are the potential solutions. Yeah. So research is a very critical component that we can bring to the table to increase awareness about the potential opportunities that lie in harnessing these new technologies or advanced technologies. So investing in that research, disseminating that research, convening the different stakeholders to allow each one of us to be able to debate and crack the puzzle of how to extend these services. So that's one. The other role that we can play is the role of de-risking the customer and what I call de-risking innovation. Innovation is a very expensive venture, and you're investing in something that you're not sure what the outcomes will be. Now, for a government and for a private player who has very limited resources, which they have to allocate to quite a number of needs, usually innovation suffers the brunt of that process. And therefore, you may find that they will either not allocate anything to innovation, or if they are to allocate anything, it will be very minimal to really amount to anything. So one of the things we do even at FST Uganda is to de-risk the innovation. We come alongside our partners like Airtel and other players in the market, financial services providers, and we invest in piloting and testing different innovations, especially for the underserved. Because we know today they may not have a lot of money, but if the right environment is provided around them and they're given the right support, they could probably become cash cows tomorrow. But the private sector and the public sector may not have that patience to wait for that to happen. So we come in and we're able to provide grants, we're able to provide advisory services through consultants, who can then be able to pilot and test these different approaches. That allows the private sector and government to be able to see where the opportunities lie and to be able to allocate resources where they will achieve the most impact. So then the other one is, I could say, especially in relation to financial services, is, we could call it risk guarantees to de-risk the customer. I talked about risking the innovation, allow the private sector players and government to know where the opportunities lie, but also there's de-risking the customer. Because most of our people, close to probably 70%, earn less than or equal to $2 a day. That's not really much. And yet there's a lot of potential we have in this country that could potentially move them from $2 a day to probably even $10 a day. But where they sit now, they are very risky and no one doesn't want to touch them. So the donor will come in, or development partner will come in and then cover that risk. Cover that risk until such a time when this customer becomes a viable and profitable customer, that they can be able to be served and be able to grow on their own and also be able to earn a profit for the customer. But at the moment, when they're earning less than or equal to $2 a day, they can barely survive, and therefore even those who are serving them cannot be able to earn anything from them. So if the development partner can come and cover that gap for a certain duration of time to allow for this customer to mature into a viable and profitable customer, then that is something that the development partners can also be able to do in developing this market.
Yeah, you raise the issue around development partners playing a role of a convener or being able to, to kickstart some of these discussions. And this is what we are doing today with this series that we've been having on this particular topic at Financial Sector Deepening, because we are a convener and we are starting these discussions. And that's why you see we have had different people come onto the podcast, and we are taking it over to you out there, that if you feel that you can be a part of this discussion, please join us and let us see how we can kickstart and support, the fintechs, government, as we pave our path towards alternative technology. So I'll bring it back to you, Joseph. You mentioned earlier on, you mentioned and talked about the role of government. And I don't know, are there any examples that you've seen in the market where government has come in to kind of promote financial services or mobile financial services in Uganda particularly?
That's a tough one. But I think the foremost role that government has played is ensuring that we have enabling policies, laws and regulations that actually allow for these services to be provided to the public.
And that's major.
Yeah, we can never underestimate, because the last thing you want is to have a market where there's lawlessness. There are no laws, there are no rules, there are no regulations, everything can go. That can be very disastrous. Both the providers and the customer will lose their money. So the most foremost and fundamental role that government needs to play is to ensure that, first of all, there's a level playing field, but also there's a safe playing field. That, so far, I can say that government has done a good job. There are a lot of things we can do. There's a lot of improvement can happen, but Rome was not built in one day. So we need to celebrate what we've been able to achieve so far, as we hope and pray for more, like Oliver Twist. Yeah? So that is, that's one. The other one, which government can consider, is how do we equip the customer? We provided a level playing field. We provided a safe playing field. We have regulators. We have different laws, we have different regulations, but now it's of no great use if you have a very safe playing field. You have the referee is in place, but the players are not on the field, right? Yeah. The spectators are waiting, but no one is coming to the field. So we also need to equip the players to actually come onto the field. And that's why we're saying, can government come in and see how we can equip the customer? I talked about it earlier in my submission. Yeah. If we can get a smartphone in every adult Ugandan, we get a SIM card in every adult Ugandans. Currently, it costs 2,000. You will be amazed at 2,000 in some of our villages. That is money they spend a month. So spending it on a SIM card, you'll be asking them like to sell their land, right? Although in this part of the world where we are in Kampala, it's peanuts. So making sure that even those SIM cards are actually subsidized to almost zero, and the cost of you getting a mobile digital wallet is almost near zero. So at the moment someone becomes 18, the first thing they get is a SIM card, they get a mobile digital wallet, and they get a free smartphone, courtesy of government. Now, that may sound like a huge investment, but what you're essentially doing, you're equipping all Ugandans to actively participate in the digital economy. And the transactions that will happen in the digital economy will be more than enough for government to generate the revenue they will have lost in investment. So it becomes like an investment. And I believe that's also an area where development partners can also come in and support government, so that the likes of Airtel, MTN, and other private sector players in that space, their role then is now to provide efficient service that allows people to transact and be able to grow their businesses and grow their households. So for me, I think that is not new. In countries where digital services are highly developed, there has been heavy government investment and involvement. Countries like China, countries like India, you clearly see a government footprint in their digital economy.
Yeah, so government plays a very important role. So, Sulaiman, the plan is really to reach the underserved, right? And most times, even us who are quote-unquote privileged, complain about heavy data costs, complain about the high cost to accessing, networks or mobile networks in different forms, whether it's a call or data, right? And for some of these technologies to be properly implemented, we would need to use data or to use the internet. So from where you sit, what can be done to subsidize these costs? Because there's definitely a divide. Joseph has spoken about a group of people that survive on $1 a day, right? And these are the people that we want to make more financially inclusive. So how then, from your side, do you see us, or do you see yourselves reducing data costs, or the cost to even buy a SIM card, like he mentioned? It's 2,000, but not everyone can afford it. So from your side, what do you think can be done to subsidize that for the low-income earner?
Okay. To pick it up from the, the support that probably the government, or the role the government needs to play in this support of the digital economy. Yeah. Picking it up from Joseph, as we enable the customer, of course, there is a cost to it, and the cost to having a smartphone is, of course, you have to run it. You have to run it on data, you have to run it on airtime. There's a cost to it. And of course, telcos, it's where they make money. So I think it's one area that will then say the collaboration with the government comes in, or NGOs or developing partners, to see how, one, we can zero rate the data consumption for essential services like education, like health, like mobile banking for the underserved, such that we can bring them on board to be able to participate in the digital economy. Of course, zero rating means a cost on the telco because of the infrastructure and the revenue that they have to make. But if we partner with the government, developing partners and NGOs, then that means we can come up with packages that can support the underserved customers to participate into the economy at a zero-rated data consumption or even voice calls for the devices that government would have supported to give these customers to participate in the digital economy. Another option would be a tiered approach where we say, okay, for this particular customer segment, we can provide low-cost data accessibility or voice for them to be able to participate in the digital economy. And this will give a drive into the participation of the digital economy. So two things can happen. One, zero rating for the essential services, but that, of course, we need the support from the government, the regulators, to see how we can manage the cost of operating vis-a-vis giving a zero-rated service. And then two is to continue making money as a telco or telcos, but segment the customers, that customers in this coverage, because of the nature of the customers we have, we shall tier the service and give them a lower cost service of data.
So that would be part of your corporate social responsibility, right?
Yes, definitely.
Actually, I wouldn't want to call it corporate social responsibility.
Yeah.
It is probably actually a strategy. Because as I speak now, you will find that close to probably 6 to 7 out of every 10 adults are not engaged in the adult economy, in the digital economy. That is a lot of money, a lot of profits left on the table by the likes of Airtel Money and other private sector players. Not that these guys are poor, it's just that they don't have access to opportunities. And yet the technology that the likes of Airtel, MTN, and other similar organizations or players, the technology they have can actually enable these guys to become more active and to generate more profit. For instance, if what is talked about, the zero-rated, is actually linked to productive activity, not that people are using it for TikTok or the like. Not that TikTok is bad, but you see, before you do TikTok, you need to first make some money, right?
Yeah.
So if you have a farmer, right, they are part of this value chain, and for them to meaningfully and profitably grow in this value chain, they need to be linked to a digital service, right? Let's first give them Airtel and internet for free to allow them move their goods, to allow them communicate with their suppliers or where they are selling their goods, right? And if they sell more, they will eventually graduate from what you call the lower tier where things are free. In any case, probably they'll provide you 50 or 100 MBs. That's just sufficient for you to make that transaction. But now, if you're making more transactions, you're growing, you'll now be earning more money to actually buy more MBs beyond their free MBs, right? And what Airtel or MTN has actually done would then, what they provided for free will now be an investment to actually move this guy to a more active customer, because it's linked to an economic activity. Yeah. So you may find that even some of those packages may only be available for those who are involved in economic activity, not guys who are idle in the streets looking for the next joke on TikTok, but guys who are actually involved in economic activity and they need this service to actually move their goods. So the first maybe minutes, the first MBs are provided for free to allow them move their goods, and then begin earning money. And that money they earn, they'll eventually spend it more on airtime and other internet services or other services these guys provide. So in that way, it's not necessarily corporate social responsibility. It's actually an investment they are making. Of course, the donors and government can come in and subsidize that. But even from a donor perspective and a government perspective, it's also an investment. It's also an investment on their part.
Yeah. I like that clarification. So you look at it as an investment.
Yeah.
Yeah. So from where you sit, Sulaiman, and is there anywhere, are there any examples that you can give, or any country where data has been subsidized to almost zero for the low income earner? Is it even possible?
Yeah, it's possible. I think I saw it happen in Rwanda sometime. I think that was around 2020, and it was to the underserved, given it's a dairy economy, just like the western part of Uganda. And this was to drive applications where dairy farmers come on and get to their cooperatives and be able to communicate and move milk, and actually receive payments and pay for any other products that can support their dairy farming. So I saw in the government coming in to actually zero rate, but again, zero rating means that we are actually driving usage of the mobile application that is going to support your dairy farming. At the end of the day, once we zero rate and you start using, definitely you're going to receive money from a cooperative that is paying for your dairy service. Receiving money for a telecom service that is giving you this data for free is actually making money of a collection service from a payment perspective. And even you, the farmer, you're going to actually receive that money, but also pay for other services. So by paying out, you're also actually contributing to the revenue of the telecom company that has provided you that data for free. So even in Uganda here, we can actually look at it in that perspective, from a telecom perspective, and see that if we have an application or a digital app that is going to support the economy, picking an example of that dairy application, where the farmers get onto the cooperative and understand where they're going to sell their milk, we can zero rate it. Once we zero rate it, we will know that at the end of the day, we'll earn money from the transactions that will be happening on that digital application, because there will be money coming in and money coming out when it comes to payments of services that come within that economy. And we can have so many use cases for that. It can be a health service, it can be an education service. We zero rate it, but at the end of the day, there will be money coming in, money coming out at the point of using that digital application. So we can always recover that revenue.
Yeah, so that means the solutions that we are talking about, or the solutions that we are discussing with this series, are actually practical and can be done with the right support. So Sulaiman, I'll just take this back to you from where you sit as a fintech, right? We've talked about government support. Joseph hinted on the role of government in terms of regulation and things like that. So what kind of policies do you think would support you in forging this path forward, whether it's to, for example, have initiatives around zero rating or tiering, or even developing the new infrastructure that you spoke about earlier? What kind of policies do you think need to change or need to be added on to what's already existing to support you better?
Okay, so one, of course, it's to have a leveled playground because of the competitions that comes with the fintech environment or the telecom environment. So some of the policies that we'll be looking out for is creating a leveled playground such that we don't have too much of pricing of the products that are coming. One competitor is pricing this high, and for your so it doesn't create a level ground. So we would like to see a policy around that. Then, of course, we would also like to see a policy of exclusivity. Yeah. So this competitor only can create this product, the other one cannot. So we need a policy such that we have a free leveled ground whereby it creates and drives innovation across the fintech sector and also the telecom sector to drive the digital economy. There should be interoperability policies as well, whereby we can extend services to different touch points, and of course collaboration policies coming into play. And I think the government is coming in with the right policies, specifically for the banking sector, the Bank of Uganda coming to regulate the fintech, the NPS Act that came in. When you look at the guidelines that are in that act, they're actually on the right path to driving the digital economy, and we give credit on that. And of course, on top of the policies that I've mentioned, as we continue to do, like I still insist to speak about cybersecurity policies coming strong into the digital economy, because as we drive the digital economy, we create threat. Customers' trust might be lost to actually trust the digital economy services that are coming with it, if probably their money is lost and everything. So we have policies. We need to have policies around how to build trust in terms of protecting the customer. Of course, protecting the customer through cybersecurity, protecting the customer through data breach and everything around that.
Yeah, and you've just moved us to the next topic, because then I was going to talk about cybersecurity and how we can build trust between the customer and then the financial service provider. So back to you again, Sulaiman, since you're already touching on that topic. What have you done on your side? For example, as a fintech, you're already offering these services. What have you done to build trust with your Airtel Money customers? And what are some of the other things that you think, that you envision that you would need to do as you try and adapt to new technologies? Okay.
So on an Airtel side of view, we are driving awareness of security and of course management of your own security. When we offer you a code for you to be able to access our services, we offer you a number for you to be able to access our services. Yeah. When you come to the Airtel Money service catalog, for you to access any service or do a transaction, you have to authenticate it with a PIN. So we are driving awareness that that PIN can actually open your money to any outsider. So you have to keep it safe and make sure that you don't share it with anyone. So that awareness campaign continues to happen, and we shall continue to drive it to ensure that the customers are protected when it comes to the services that we provide them, so that they don't lose their money. So we drive awareness. Then two, of course, from a back-end perspective, is for us to implement cybersecurity protocols that prevent us from being attacked by hackers or even threats that come by the cybersecurity. So in that way, if the customer's money is not lost, we are building trust. If there is any cases where the customer's money is lost, you'll find that probably the customer exposed their PIN or somehow they have used the weak PIN. So we also continue to educate them about the strength of their PIN, and they should change that PIN often, because if you keep using the same PIN for a long time, it can get exposed, and of course you will lose your money, and you might lose trust from Airtel Money perspective, yet actually the exposure started with you.
Yeah. So over to you, Joseph. Literacy is something that is core to what we do at FSD. So as we adopt to new technologies and we are trying to tell people that these are safer, quicker alternatives that we can use, what do you think needs to be done to drive that? What do the fintechs and other financial services providers, for example, need to do to ensure that we spread the message and the right message to the low-income earner that we are targeting?
Now, that's a very interesting question. Most times when we talk about financial literacy, what comes to people's mind is awareness. Yeah. Either talk shows or these vans that marketing guys use that go around, with a big horn. Yeah. And they call them activations. Yes, I think that's the word. They call them activations. But that's only one part of the financial literacy journey. I usually tell people the financial literacy journey has 4 stages that one has to go through, and they can take as short as a few days, and for some it can take as long as years for you to actually complete that journey. It begins with awareness, and then it graduates into understanding. Yeah. I'm aware about banking, I'm aware about mobile money, but it is of no help to me apart from being aware. I need to understand how mobile money works. right? And probably I can explain it to anyone. But even then, I am not yet literate. At best, I have an understanding of the product. When I begin to get a semblance of literacy is when now I start putting into practice the knowledge I have about mobile money. Because now I can actually literally use my knowledge to manage my money to my benefit and to the benefit of those around me. If I do it many more times, I then now becomes a habit. I've now become a master at financial literacy. I could now say I've graduated with a degree in financial literacy. That is a financially literate customer. So meaning that it will take more than awareness for us to build the capabilities of our people to meaningfully engage the financial ecosystem. Yes. We need a combination of not just awareness, but actually education, so people can understand the products, but also they need to be given opportunities to actually put in practice what they have learned. Yeah. And that's why at FSD Uganda, we very so much believe to link our financial literacy campaigns to a particular project, a particular program. You know, if I know that Airtel or MTN or any other provider is targeting maybe a group of farmers in Buhenju, right? That's the best way to introduce financial literacy, because we know that farmers, they need money to grow their farms, but probably they don't know how money works. They don't know how to manage money. That's a very good opportunity to begin telling them about money, because then they will have an immediate opportunity to put in practice what they have learned, right? But if I just go to Buhenju, put people into a hall, give them allowance, give them lunch, and tell them about financial literacy and mobile money, I bet you that knowledge will be left in that place when they leave. They only leave satisfied, but with all your knowledge left in the hall. But if they have a specific need or specific activity they're engaged in, where they can continually put into practice what they are learning, then you're sure that 1 or 2 or 3 or 4 times, when they keep doing that, they'll become now masters at what they're doing. So for me, I think that is the approach. Does it mean that we forsake the general financial literacy awareness? No. It is something that should be provided on a regular basis. If anything, it should be integrated within our education system. So it becomes part of the general knowledge that anyone gets. As they grow, they get to know different types of money, understand how they, and now when they grow old and now they have their own money, they want to begin to practice what they have been learning in school, right? So there's a place for that, but that is, I think, a public good that government can be able to do. And the best way to do it is probably to integrate it within our education system, because then they know that once you train the child in the way they should go, when they grow up, they will not leave it, right? Yeah.
Okay, well said. I actually, when you were mentioning, in my head, I was testing myself to see if I remembered from the last episode, and I failed at one. But back to you, Sulaiman. So you are a fintech. What are you doing on your side, for example, currently as is, to motivate, right, your users to have a good experience with your services? What are some of those things that you also think that you could do better as we move to adaptation? How do we make the current experience pleasurable so we can draw in more people, right, into the digital services world?
So the first that I would mention about is availability of the services. If this service, every time the customer wants to use it and it's not available, or they try a journey and then in between it dies off, the experience becomes very poor. So they will not adapt. They will actually drop that service and look for something else. So in Airtel Money, what we're driving is a highly available service at 100%, that anytime you want to do anything, any transaction on mobile money, you should actually be able to complete that transaction. Now, once we have done the availability and completed that, we also want you to have the best experience. You should not spend over 1 minute on a journey. So we are looking at standardizing of our journeys, which we've done, and ensure that we have the shortest journey experience. If you're paying for electricity, for paying for national water, it should take you at least 3-4 steps for you to conclude that payment and get a notification. And getting a notification is a confirmation that your payment has been successful. That also creates a good user experience. We've also come up with the digital app, which is my Airtel app, where Airtel Money sits onto that app. And on there, we've also improved, of course, the user experience journeys. As opposed to the USSD, you're able to check who you're sending money before you actually make a payment in the phone book, such that you eliminate the errors of sending to a wrong number. That improves experience. We also, on the mobile app, again, we've added a component where you're able to add a withdrawal charge. Initially, you would send money without knowing what the withdrawal charge is. The other person gets less money, then you have to send again. That's a charge. But because we want to improve experience, what we've done on that is, this is the cost that you want to send. This is how much it will cost the other person withdrawing. Do you want to proceed with the total cost of this, or you would want to just send the principal amount? So the customer makes a decision, and then if they want to send with the withdrawal, it goes, and then the other person gets the amount they are supposed to receive. So that also improves experience.
Yeah, Joseph, anything else you'd like to add to that?
No, I totally agree. Yeah. One of my worst experiences with either mobile money or agency banking is to go to an agent and they tell you the network is down. And when you really need the money, whereas if the money is in your pocket, you can never have network down, because you just put your hand in your pocket and get your money, right? So if the telcos, the banks can crack that puzzle, then they will have won the customer. Because there's nothing that beats the experience of just putting your hand in your pocket and you have your money, than actually going to an agent and they tell you network is down. And sometimes it can be down like for a whole day. That means that you don't actually have money. Yes, your money is stuck somewhere. And yet if it was in your pocket, you just go under your pocket or under your bed and get it. So for me, I think that is the fundamental thing that providers like Airtel need to crack.
Yeah. So we've spoken really greatly about what the MNOs need to do. But Joseph, from your experience working with other financial services institutions like banks and SACCOs and the like, what do you think their role would be in this particular discussion?
I think their role is the money. The likes of Airtel and MTN and other players, their role is to provide the rails upon which money can actually be delivered. Yes. But the money guys are the banks and the SACCOs. The Airtel guys, they build the roads. The financial guys, they need to fuel the cars so that the cars can actually use the roads. Yes. So that's why sometimes it becomes very expensive to use the services of Airtel, MTN, and other players, because there is low activity on the roads that they have built, and they need to recover their costs. So if financial services providers can also crack the puzzle of the customer, they can understand their customer and work with the customer to grow and become profitable, then everyone will benefit. And the only one and the only player, the only participant who have that capacity to grow the customer are the money people. I think last time we talked about money. and money being a medium of exchange, money is what catalyzes the creation of value. It's the one that makes it possible for value to be exchanged from one partner to another. So it is the money from the banks, money from the Stanbic banks that will catalyze economic activity he was talking about. He will provide free airtime. He will allow you to cross the road and to use the road so that you can go and harvest and take your produce to the market, hoping that when you're coming back loaded, you will be able to drop some money at the toll so that you can earn what you spent, what you lost when you're going to the market. Now, it's the bank that gives you that money and allows you to go to the market, exchange your goods, and be able to earn something. So that's where the fundamental role of financial service providers comes in. They provide the oil that moves economic activity on the rails that are being built by the Airtels, the MTNs, and other PSPs of this world.
Yeah. Okay. Well said. So, gentlemen, we've come to the end of our podcast. But before we do conclude, I would like to get your parting shots. You know, you've been a part of this discussion from the start. What then are those critical factors from your side, the critical actions that we need to take, right? Whether it's government that we've spoken about, whether it's your own entity on the fintech and on development side. So just one critical action, and then we will wrap it up.
Okay, so from my side, I think given the discussion of driving a digital economy, and of course picking it from the transformation from USSD to mobile application, and I'll speak specifically to Airtel Money, we are driving the usage of our app, and you would see that more transactions are still happening on the USSD. So it's a critical action point that we take on our side to see how we can overtake the usage of USSDs. And it's really a big task and a challenging one that we're looking at, but we are happy to see that these episodes have been looking at that. We're already looking at how we drive more traffic on our application, digital application. It's not only easy to manage, but also easy to change products and improve experience and whatever it is that you want to do, as opposed to the USSD. So the action point that critically we take here is to see and continue to drive the usage of our mobile app such that we can support the digital economy, as we also see how we reach the underserved who are still using the feature phones, the access with their USSD. So as a telco, and part of the fintech side is to see what support does the telco, or what support the telco will give the fintech. One, to reach the underserved with smartphones, with the support of the government, if they can provide the smartphones like Joseph mentioned. Then for us, we shall just put the service on top of that and then drive transformation or drive the digital economy.
Yeah. Thank you for that. Over to you, Joseph.
No, all I can say is that they usually say that in everything, change is a constant. Yeah. So we should not be wary of change. I know we're used to USSD. It has done a fantastic job. It's like that bicycle that has been so wonderful, working so well in the village. Yeah. But now it's time to go to town. Unfortunately, in town, bicycles don't work. Or if they're to work, it's a tedious process to use a bicycle in town. You need actually a car. At best, you need to get onto a bus or a train to allow you to navigate the traffic in the urban. We have grown. Uganda is no longer a village, it's an urban center with a lot of traffic. Bicycles are actually even dangerous. Even if you can cycle your way in the traffic, but it's very dangerous. I would compare USSD to someone who's trying to cycle their way in such a busy traffic in town. It's even worse than a border. So we need to upgrade, and it will require investments from both development partners, from the government, as well as private partners. It does not fall on any one of the three. All of us need to work together in partnership to see that we move away from bicycles to now actual automobiles that allow us to navigate the traffic in now a more developed market safely. Yeah.
Thank you so much, Sulaiman, and thank you,
pleasure.
Joseph, for your very important and very experienced view on how and why we need to move away from USSD to alternative technology to basically grow our digital economy. And I thank you for that, but also for the viewers out there. I think this has been a very lovely conversation. We have come from understanding USSD, understanding its need in the market, and as Sulaiman mentioned earlier, we still need USSD. It's still the bicycle that Joseph said, but we need to move away from that. The two can coexist. We need to move away from USSD slowly and then adapt to new technologies. We've discussed what those alternatives are. It seems complex right now, but the beauty of it is that it's achievable. It's achievable with the right investment, as we discussed earlier, whether it's in software, hardware. It's achievable with the right policies, the right regulatory framework, and most of all, it is achievable with the right collaboration, the public-private partnerships that we have emphasized so greatly in this episode. It is truly achievable. Thank you so much for walking the journey with us. Thank you for being a part of this conversation. We look forward to hearing more from you. Please engage with us, engage with the panelists on their different social media handles. This episode will be available on the FSDU social media pages and especially the FSDU YouTube channel. Thank you so much for listening, and thank you for being a part of the conversation.